All you need is a little patience. All right. GNR, guys. What is that? SPDR ETF covering S&P Global Natural Resources. I believe that what you have in that one is some oil companies, Chevron, Exxon, and this has got my attention because of this monthly defined breakdown right here. Where's my monthly defined resistance? Right here. So until we have a close above 5160, nothing to do. You're in no man's land. If you're below, well, now the 12-month moving average, if you're below, right here, let's bring it up. My monthly defined breakdown line at 48.22. Then I have price action below the 12-month moving average. I have a 12-month average starting to skew downwards, identifying the trend. See how it's starting. Same thing here. Don't know how far it's going to go. But that's okay. You have your, as long as the price action is below it, you have to accept that that's the trend. It's going downwards. Sure, it could revert. Sure, it could slow down and eventually go back up above it like it did here. But until it does that, you have to listen to the price. Right here, you're in this type of situation right here. You could have a sideways move if you go too far away from the 12-month moving average. You have this type of scenario, sideways move or pull back close towards it. You test it. Either you close above and then you should not be shorting anymore, or it bounces down and that's a continuation down all the way down. So right now, here we are at implied measure move from that breakdown was reached, from that top pattern was reached in that same candle. When there's fast moves like that, it happens sometimes, but you can't play it on the monthly chart trading if it breaks down that fast, but that's all right. You're still using that as to identifying the higher prevailing trend, guys. What could happen here? 12-month average. Maybe a comeback test here. Test that breakout line, that breakdown line. And here's it would be our good risk reward entry. All right, let's zoom in. Zoom. See that monthly defined resistance, monthly defined support, price action above. That's noise, false breakouts. Oh, it's breaking out. Well, not according to the monthly close, guys. Price action went back in, saved you some whipsaws. Here. Starting to define that monthly defined support, price action closing above on the monthly. Weight of evidence, even here, price action below, but you're still in that Ichimoku cloud. You don't want to short yet. You want to wait. You need all these clues. You really want to start rolling over. You don't want any more excuses technically for the price action to not go in your favor, to revert. You really want that weight. All those buyers to exhaust themselves. You want them really to start panicking, and then the sellers, they come in. Look at that. Oh, lower highs, guys. Lower highs. And right here, when the price action is going back down, kind of looks like the SPX a little bit today. The Ichimoku cloud coming into effect, helping the price action give another go. Oh, close above the 30-week average. But not enough to overcome those previous highs. And when it starts rolling over and the price action goes below the 30-week average, then you could expect a way to go down. You still have some Ichimoku cloud, so the safest bet is always to wait for that close below the Ichimoku cloud, below weekly defined support, close below the monthly average, the monthly defined support. And then once you're out, see that pullback 2 weeks later. Oh, pullback. You have that wick. There's probably some daily closes above that support now turn resistance. Could not get all the way up to the monthly defiant. So all this zone here resisting. Now you're on the other side. You have the 30 moving average going downwards. You have the 12-month moving average going downwards. You see how it all adds up? So these pullbacks, you have confidence that there'll be simple pullbacks and there won't be reversals. Good risk reward entry right here. Especially here when that closed right below the Ichimoku cloud. And you see that the wick, all those sellers coming in after the buyers try to make another go. And after that, down, down. And now today, gap up. So now what are we going to have? Are we having another pullback again to test those levels and then another continuation short? You'd still have lower highs, lower highs, lower highs on the weekly. Or we're just going to continue going down. Where's my next? Let's go back on the monthly. I just want to identify right here. That's how I do it. Always identify that important monthly defined support. Anything that could go on your way. Here's previous resistance turn support, what I call a wall, and here's the end of it, the natural support. So all this is a zone where the price action could actually sink in on the daily, on the weekly, have a long wick, close above. So now if we go back on the weekly, you see we're starting to get close to that bouncing off that support zone right here. So now it's just a question of waiting, guys. If we could get a bounce back up here towards higher up, close to the 30-week average, close to that weekly defined support, now turn resistance, we could have a good entry right here. Let's remove that. That's my monthly scribbles. Boop, boop. That's it. And that's about it. So the 30-week average might look like that. So if the price action, I don't know if it's going to go that high. What, it gapped up and it finished red? Yeesh. Okay, the week's not done yet. Maybe we can have another chance here. And another entry right here possible. Tested the support once. Next time maybe it's going to go through. Expect pullbacks on these areas. And as long as the 30-week average is declining, as long as you're not violating a 4-point trend line, that's Stan Weinstein's, we don't have a 4-point trend line here. Not yet. As long as the lows, the highs get lower and lower, then you're all good, guys. Underperforming the SPX, Mansfield Wealth of Strength. It's actually been in the stage 4 since right here, right this candle right here. But you need more than that, right? Stage 4 is just the beginning. You really want, no, not here. Even if you were underperforming the SPX and the 30-week average was going downwards and the price action was below, you still want to break on a horizontal line. And once you have that, then it's the weight of evidence. How's the overall market doing? How's the sector doing? How's the industry doing? What stage are they in? How's the higher trend? That's where we're going on the monthly. And how's the close overhead or under support? And that we're using the Ichimoku cloud. That's a tip I got from Isa Trader on stageanalysis.net. And I really fits well. I've really noticed patterns where the price action actually rides it or it gets sucked back up. And it saved me a lot of whipsaws before pulling the trigger. I really want to make sure it gives you a clue. Because right here you could have breakdowns where you see all that Ichimoku cloud defined support and you say, man, I'm not out of the woods, because this could all help push the price action back up, guys, when you reach it. But as time moves on, and that's the stage 1 or stage 3, the Ichimoku cloud goes sideways, gets thinner and thinner, and when you have less and less of the Ichimoku cloud to go through before you're in clear territory down, guys. So GNR, guys, it looks pretty good. I could do one more thing. I could do the inverse chart. And look at that. So if you would play this on a stage 2 breakout, then you would play this on a stage 4 breakdown, guys. Here's my horizontal breakout line. Coiling up, lower, less and less volatilities, higher lows, 30-week average going upwards. Breakout above the Ichimoku cloud. Look at that volume, twice the average of the previous 4 weeks. Yeah, that red candle, not super duper. We'll see how the week ends right here. If that pullback completes, and then we could go up. So we're gonna have to wait to see how this ends here. But this would still look pretty good, except for this red candle here as a stage 2 continuation breakout, guys. So if you could do that, it removes your bias of whatever resources are supposed to go up in the bear market, or whatever, all this reasoning, these correlations that could have been true in the past, maybe not true now, but correlations could change. Forget all that. Inverse the chart for -1 on trading view, and if it still behaves like a stage 2 breakout, then it's the same thing. It's going to be a stage 4 breakdown, guys. All right. Okay. Thanks for watching. Ciao, guys.